Hey, so I'm really into this group of stocks called serial acquirers, this business model where acquisitions are a big part of the value creation story of these businesses. And REQ Capital, like me, are really into serial acquirers. And I've just put out a presentation and it is fascinating. And it's about 300 pages. What I'm going to do is, instead of you having to read it all, I'm going to go through and give you my highlights and a summary of this presentation by REQ Capital. Go to their website to get it yourself. It's exceptional. So let's jump into, I guess, the playbook of serial acquirers. Now, a lot of people are not into the serial acquirers, but I am, and you might be wondering, well, why the serial acquirers? Why do I have such a love of this business model? And I think this slide sort of sums it up quite nicely. So what I really like is the strong returns aspect of serial acquirers. So you've got organic growth, you've got acquisitive growth as well. So if you're buying businesses at 4, 5, 6 times, let's say in that range, and then you've got 5, 10% organic growth on top, we're talking like 15 to 30% growth that can compound. So this high reinvestment rate as well. And as long as the businesses, they've got lots of businesses to acquire, this can continue on for a long period of time. And why I think it is also low risk, the same as REQ Capital, is because if you're doing this well and you're buying good little businesses, you start to get diversification across all these different businesses. You can be in totally different fields. Technion's a great example here, is where they have businesses in lots of different little niches, so that something can go wrong in a particular business or a particular industry, and they're really not going to have the big risk of blowing up. So let's say we talk about another business. Netflix is a really good example, where they have one real kind of business, which is streaming content. And if a lot of other competition come on, well, that business starts to decline. And that's the whole business. Whereas in serial acquirers, they have lots of these little niches. So it would have to happen across the board in all the niches for them to have serious declines. And I just like this diversified approach. And I think that feels safer and you still get the strong returns. So like I said earlier, this is kind of the playbook. So a focus on capital allocation, then decentralization, and people. They're sort of like the three big ingredients to make a good serial acquirer. Capital allocation we kind of talked about. Decentralization is the idea of the head office or the people making the acquisitions are trying not to get too involved with the daily operations. That sucks up a lot of their time. It takes away their focus on making more acquisitions into the future. They really need to find decentralization and people go along together nicely, because if you find these great people to run these good little businesses, you can just let them do their thing. You can let them make the decisions. You can let them focus on growing the business. And if you only have to check up on them or get reports from them once a month or once every 3 months, or even better, once a year, you have the ability then to focus on the actual big growth engine here of the acquisitions. And I think that's what the best serial acquirers have done, and that's the playbook. Now, this graphic breaks those sections down into far more detail, and I think this is really interesting, and this is the details that you look at when investing in a serial acquirer. So for capital allocation, you're looking at like a focus on cash flows, a focus on cutting costs, but without the detriment of people and the growth of the business. Then you've got a focus on return on capital. They go through all the list here, and I'll let you read them yourself. Decentralization and the different parts that make up good decentralization. So things like the business owner at the subsidiary level, they own their profit and loss statement. So that's their responsibility, and they have to make those daily decisions on the money that they're spending, how they're going to grow, all those types of things. And then the people. So we want them to be aligned with the investors. It gives you some like soft things here as well. Like they need to be down to earth and pragmatic. This is just the things that REQ Capital have found. The good serial acquirers, this is what they're looking for, and this is what they have in common. Now, if you are starting to get into these serial acquirers, I put out an email called Yes Stocks, No Stocks once a week, where I update valuations on a handful of my favorite serial acquirers. It's free. You can sign up in the link below. And this graph tells you why I'm interested in serial acquirers. This is just the Nordic companies for the last 20 years. So a lot of serial acquirers came out of Sweden. It was started like 20 or 30 years ago, a bit longer than that. And this model was just shown to work really well. So there's a lot of copycats coming along in the Scandinavian marketplace. So it's a bit of a hot spot for serial acquirers, I guess. And you can see the type of returns they've been getting for 20 years now. And this is even comparing it against Berkshire Hathaway, which I find very interesting. Now, this graph shows that it's not just working in the Nordic countries. This is a global serial acquirers kind of benchmark index that REQ Capital have put together. 17% returns for 20 years compared against the 9.7 of Berkshire Hathaway and about 7.5 for the S&P. Now, I think this graph is pretty telling. I think that focusing on serial acquirers is an opportunity to invest in companies that can outperform the index significantly. Now, being a serial acquirer is actually really difficult, and you've got to get a lot of things right. These actually blow up quite often, especially the roll-ups. Here's a list of how they can blow up. So using too much equity to make the acquisition, so issuing stock, that seems to cause troubles in the future. So it's good when things are going well on the stock market. It can be really difficult when things aren't. There's expected synergies. So if you're going into a deal expecting to make all these, you'll be able to buy in bigger quantities because you have more of these. Or if you're expecting synergies out of the deal, that's generally a recipe for disaster. This has been proven many times over in the past. You just don't get the synergies because it's harder than you think to bring people together. Different businesses, even in the same industry, have very different cultures, and getting people to work in those different cultures and melt that all together is really difficult. And there's a lot of examples of this not working out very well. Another thing to be careful of are if serial acquirer businesses are issuing short-term guidance. Are they buying turnarounds? That can be a problem. A lot of times they don't actually turn around. They're buying listed companies. Obviously, Berkshire Hathaway does it, but not everyone's as good as Berkshire Hathaway. If they're making not many deals, but they're big, large deals, that can blow up if they make a bad deal. I think I like the small, little deals and many of them strategy. It's like a table with 30 legs on it. You can break a few, the table's still going to stand. But if you're only making one deal every 2 years and that blows up, all of a sudden, you're 5 years behind. So lots of little deals, mitigating risk, I think, is the strategy there. So there's a list here of the don'ts of serial acquirers, or just things to be careful of. And I also did just mention that Berkshire Hathaway are buying listed companies. So even though these are sort of like the things to watch out for, there are actually success cases of businesses doing these exact things and then working out. It just seems to be if you look at enough businesses, these seem to be the things that perform. The businesses that do these things don't perform as well and more as reliably. And that's what REQ Capital have found. I think that's really good to illustrate. It doesn't mean you just reject a company immediately because they're buying turnarounds. Constellation Software buy a lot of turnarounds. So it's going to be a bit of it depends, but it's nice to have some guideposts here. And this is exactly what this list is for. Now, if you're going to invest in the best serial acquirers, you're going to need access to international markets, the Scandinavian countries, England, Japan, Australia. So you need a broker that's going to let you do that. Interactive Brokers is exactly how I do it. There's a link in the description below. I hope you're enjoying this summary. There's a lot more to go. I'm going to continue that in the next video. Let's keep diving into serial acquirers.